Friends, good morning, Happy New Year to all of you. This is a video after say 1 week. Last weekend I could not post the video because I was traveling. Now let us run the analysis for last 2 weeks. So the last analysis we did for 27 December. Today is 30th December, and let's see what happens. So this was PDL, this line for 27 December, the previous day, previous session, and this is PDL. Uh, when the market opened on 38th, when the market opened on 38, it opened exactly at the PDL. So it could not, although the break the PDL, it tried to sustain here. So there is no entry on the first candle. Look, after the market is over, if the chart is formed, anybody can say, like, you should go here long and here short, and anyway, this with some logic and all. But that's why I always start with the first candle, because as if I'm not aware what is happening on the rest of part of the day. So we have to analyze candle by candle. First candle, there is no end. Then second candle, it was within the first candle range, so there is no entry. Third candle has broken the first candle low, and the CPR is also not too wide or too narrow, so there is an entry here. And I want to add in this part, when as you just post this, so short entry on this candle, the stop loss above the candle, and 1 is to 2 risk reward. So 1 is to 2 risk reward is somewhere here. Yeah. Now one more thing to remember, guys, whenever there's a pivot very near to your target, so you should, instead of 1 is to 2, you should go to the pivot, because that's the resistance or support all the time. So your target will be either next pivot or 1 is to 2. If this pivot would have been somewhere here, it's not giving you 1 is to 2, then it's not giving you more than your stop loss, like more than 1 is to 1 or 1 is to 1.5, then you should aim for 1 is to 2. But if it is very close to 1 is to 2 risk reward, you should make that pivot as your target. So first trade is done here. You should, that's why, look, you should be immediately out, otherwise anytime it can reverse. Now can we find a reversal trade here? Let me remove this. Then this first low was broken by this candle, and this candle, look, this candle has given the fake breakout or reversal. So let us put a long entry on this candle. Okay, this candle, this is let me see, this candle is what time, 950 candle. Okay, so 950 candle, but your stop loss will be day's low, because it's a it's a good support. And immediately, whenever there is a false breakout within the day and you want to target for the rest of the day, you should always aim for a bigger target. Like in this case, it is showing, it has given the range breakout trade, but it has reversed. This candle is a power candle, and it has exactly broken this from the center of the candle. So this kind of setups are powerful. Now what happened here, you see, again there is a CPR on the way and day's high is on the way. Although it worked, it was a low probability. Say your 1 is to 2 risk reward is where, yeah, it's your 1 is to 2. Again this pivot is on the way, so this pivot should be your target. Look, this pivot should be your target, although 1 is to 2 reached, but this pivot should be your target. And as I told you, since there was a CPR on the way, it is a low probability. Although it worked, it was a low probability. I'm just telling you, taking trade, not taking trade is your idea, but sometimes it works, sometimes it doesn't work. So this is a low probability trade. Then after that, I don't see any trade. This candle could not break the CPR to to make a CPR breakout trade, but this candle has broken. But it has, like, this candle should have broken, because after the red candle, the green candle, when it breaks, it's a high probability, because this red candle has a different view, and then this candle has given a breakout, but in this case it doesn't happen that way. So there is no CPR breakout here. Then it reversed. Yeah, this candle, look how firmly it break the CPR. So if you consider CPR as a resistance, then this resistance was broken on the upwards, and then it gave a false breakout. So this candle you can go short. Again, it has a poor risk reward. It's, I will not say it's a low probability, but it has a poor risk reward. So you can do position sizing by keeping it above the candle or above the breakout line, which is the breakout line. Yeah, this one. Now 1:2 risk reward, maybe it, yeah, it gives, yes, it gives 1:2 risk here. Okay, so one more easy way to identify the direction of the market is, where is this 20 EMA? If the market is below 20 EMA, means it can be bearish as long as it doesn't break the 20. Now it broke the 20 EMA upward, but since there was a CPR here, it was a low probability. Then again it broke the 20 EMA with this candle, so this becomes a false breakout for the day. And then in this trade you will have a proper you will have a more target or more profit, but your position sizing should be less. You should have less lots because the stop loss is big. Okay, uh, going to the next one, we see any important levels here. The important levels other than PDH, PDL, nothing. So market PDH, and then there is PDL somewhere here. Yeah. So no, not here. This is your PDL. Okay. Right. Now look what happened on 31st December. 31st December, first candle was a doji candle, neutral candle, no view on the first candle, although the body is small, but it is in the center of the two big wicks. So there is no trade, and the top could not be broken by this candle. It reversed, and this candle has broken the low of the first candle. But since the first candle is neutral candle, we cannot treat this as a trade. One more thing, you can apply range breakout like 1 2 3 4 5 6 7. Seventh candle has broken the range, but look where it is closing, exactly at the pivot. So, and there is a small wicks also, and it's a long candle. If you take a trade here, your stop loss on top of the candle, big risk. So, and see the CPR. CPR is kind of wide, like average to wide, but it looks like a wide CPR. So there is no trade on this. Then reversal, yeah, this is reversal, but again it is closing on the pivot, so there is no reversal trade here. There is no trade here on the first candle. Yeah, no trade. Now look at this. Here I told you just on a previous day that as long as your market is below this 20 MA, it can be bearish, but as soon as it breaks, and how it breaks, you have to analyze that how it breaks. Look, there are some okay, let me mark this level also, because this was the day's high, or you say first candle high, this level. Okay. Now secondly, for this one, this candle, whenever there is a opposite view on the previous candle and the next candle is having another view and it breaks an important level, that trade, there is a, you can say, you can name any pattern to this, but this is a kind of trade which will work. Like this should be red candle and the other candle should be opposite of that view, which is green candle, and it is breaking the 20 MA, because till this candle the market was below 20 MA. This was the first candle it took, and it also broke the day's high, not convincingly, but it has closed above the day's high. So should go long here. Stop loss is below the candle, will be too big stop loss. Sometimes you can have below the 20 EMA, or if you are doing position sizing, below this candle, below the pivot, no problem. If there is a pivot, it should be below the pivot stop loss, and 1:2. But again, look, 1:2 on the way to 1:2 CPR, 1:2 target, you have a CPR. So whatever comes first, CPR, pivot, any resistance, that should be your target. If this CPR is somewhere here, there is no trade, and you cannot have this target also. Your target will be 1:2. But since the target is very near to 1:2, you should have CPR as a target, and your target will reach here, and you should be out of this. I don't see any other trade. Fine, this was consolidating, and that's it. The next day, again, let us mark this important levels, PDL and PDH. Okay, this is PDH. Fine. Okay, this CPR, you can treat this as a partial virgin CPR. It is not, it is a like only small candle could enter and then it got reversed. So this can also be treated as virgin CPR, but not like a full virgin CPR. I call it as a partial virgin CPR. But this CPR also to be watched, because this has a power. This can treat as a resistance. Now, okay, first candle has opened, and this is a perfect setup for CPR breakout, because it is taking support at 20 EMA, then the CPR, and but again it is closing on the virgin CPR, like partial virgin CPR, you can say. So immediately there is no, there, whenever you take the trade, there should be some space for candle to move. So it is closing here, although it is very powerful setup, but you should not go long. First candle, there is no trade. Second candle, it reversed, but it is going the CPR. So as long as there is the candles are within the CPR, no trade. This candle has broken the CPR, but it is not convincing. It's not even 25% of the body has broken the CPR, so no trade on this. Yeah, there is a trade here. There is a trade here. You can consider the bottom CPR as a pivot, and this candle has broken it, and this candle has reversed it. So let's go. This candle is within the CPR again, but uh, I generally treat this as a pattern, because I have seen with my experience the last CPR, when it breaks, the last pivot of this is bottom CPR, central CPR, central pivot, and the top pivot. So if the last, like bottom is broken by this candle, and immediately there is reversal within few 7-8 candles, this can be treated as a setup. Although it is a low probability, this is with my experience, I will take the trade here, but I don't want to advocate this move, because inside CPR there should not be a trade as per the rule. So then what happened is, look, uh, this bottom of the first candle, look how this bottom of the first candle plays the important role. Suppose there is no CPR here, bottom of the first candle, this candle has broken it, and this candle has given the reversal. So there is a false breakout trade. Take a trade here, stop loss, and twice the stop loss, but within the stop loss you have a virgin CPR, so it's a low probability. Now where will I trade? I'll tell you. Again, uh, again, that's like with experience, it's not a bookish move, but you just learn out of this. Like first candle is green candle, it reversed from this. Now whenever the market comes again at this point, it will be treated as M pattern if market shows that indication, and if it is otherwise, then it's opposite view. Like the market comes to this point and reverses from here, then it's a M pattern. Suppose this red candle is exactly forming at this top, then it will be treated as M pattern. But now what happened, this could not reach here, and previously, just before few seconds, I told you, when there is a red candle, an important level is broken, like day's high is broken here with this candle, and exactly at the center you should go long. Long, keep your stop loss below this one, twice the stop loss or the next pivot, this one is your target. Okay, so let's move to the next day. This is PDL and see where is PDH. Yeah, this is PDH. Now with this CPR, you can remove the CPR because it is already broken with the candles are inserted completely. So this CPR is of no use for the next day. Now this okay, market fell down then reversed, and this can be also a turning point like this one, but it is somewhere here in the CPR line, no need to mark. Then okay, then what happened, this is average CPR, average, yeah, not too average but average to narrow CPR we can say. First candle is again kind of doji candle. It's not maybe some things are happening in the market related to US. When market is not getting the direction, then market behaves, and most of the time it doesn't give you proper result as per your patterns, but you have to be consistent, you have to follow the rules. First candle no trade, doji candle, and okay, this candle has broken the first candle, but since it is second candle, there is no trade. If it would have been third candle, there is trade, and although it's not a proper bearish candle. Now look at this 20 MA. As long as market is above, it is bullish. As long as it is below, it is bearish. Now this candle has opened here, and this candle, it opened below this, but uh, this happens when there is a slippage, like the candle close, just with the panic, the candle closed here, this red candle, but you see the next candle opened here, so there is a gap, this much gap. This is called a uh, panic reaction. Like, as soon as it closed here, the sellers tried to push in, but buyers have come from this point. Then again, it broke. So this is kind of like market is going down and it is breaking. So this candle gives you an indication that market will go up now. Suppose, okay, with experience you can say, but if you don't understand this move, no problem, don't take it here. You find a proper setup uh, with risk reward and patterns, whatever I'm telling you from the beginning. Then where is the next trade? Next trade is always along the 20 MA. So market is keeping up, 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 it's going up. You will miss this, no problem. Don't have that FOMO. Now look what happened here, this point, this 20 MA, the 20 MA retracement trade we should follow, where it is exactly here. Should go long, stop loss here, and twice the stop loss here, target will be achieved. Now if you remember, I told you, as long as there is support or resistance or any important pivot, this is a low probability. But still I am telling you to take a trade here. Why? That's how you should go previous days. Mark important levels. Previous days are your saviors. This, look, I'll mark this line now and you will understand. When we mark this line, this was you can consider this as a supply zone, because look, market, it fell from this point till this point. So this was a supply zone, big supply zone, and exactly look where it goes, exactly there. Understood? So you should always check for previous 6 to 7 days. Whatever happens previous 1 week, that can form a basis for you to take the trades for the next week or a day. Uh, this here, it tried to break, but it was not convincing. So you should take a trade on the retracement whenever market comes back to this point. So this is the exact case. This has two setups here. One is 20 MA retracement with a proper, you have a resistance kind of, now once this resistance is broken, it becomes support. It is very simple. Any support is broken, it becomes resistance. Resistance is broken, it becomes support. So stop loss here, and this is the, like, this is very high probability, I can say. You should not miss such trades. This one, your stop loss below that pivot line, 1:2 is your risk reward. It's 2. Yeah, see here. So here, okay, you can wait for candle to close, but you can even exit your trade. So, okay, this move you cannot catch all the moves. You should be only with the setup. Or some people what they do, they follow this trade until this 20 MA is broken again on a downside. So on whole day it did not break, so day closed here. You could have earned from this profit. This will come out of experience, but initially you try all the setups. 1:2 risk reward, so your risk is always limited. Now since this level is broken and the support is taken here, we can remove this. And again, as we do, let us mark PDL and PDH. So this is PDL here. One more important thing on today's thing is this is again a virgin CPR. So extend this virgin CPR. Okay, and let us see what happens. So what is the PDH? PDH will be too high. This is your PDH. Okay. Now what happened on this day? This is 3rd January. Look, market first candle is kind of like neutral candle, body and big wicks down. It's not a bullish or bearish. So there is no trade on the first candle. Second candle broke this 20 MA, but still within the range of the first candle, so no trade. Third candle has broken it, but there is no trade because there is immediate CPR on downside, and CPR is kind of wide. So what you have to do when CPR is wide, it is usually a reversal day or a sideways day. A market is giving indication that it will go in this direction. So reversal means you have to wait for reversal. So which candle has given the reversal? This candle. This is 10 AM candle. Now, whenever there is a wide CPR, the market or like any time, market has a tendency to reach to the topmost resistance or bottommost support, and there is no proper risk reward. If you take a trade here and put your stop loss below this CPR, it's not a good trade. So when there is a wide CPR, you should wait for candles to come in this two, the bottom one. If the market is falling from top, there is a pattern called CPR reversal pattern. You have to wait for proper bullish candle within the CPR, but bottom two, like this central pivot and this bottom pivot. In this range, it should form so that your risk reward will be less. Even if you take a trade here, your stop loss should be here below this bottom level. Now, which candle has formed within this and proper with the first candle? This candle. This is 1040 candle. So, go long, go long here on this candle top, and stop loss will be below the CPR. Below the CPR. This is how you should protect your capital and follow risk reward. So 1:2 is somewhere, yeah, it is here. Okay, here or the top of the CPR. That's it. You should be out. And okay, I told you there is no trade inside the CPR except this pattern, because this pattern itself is a CPR reversal pattern. Okay, when the market is falling from top and then there is a reversal pattern within CPR, you should go for the trade. Or market is coming from top and then reversing within the CPR, you should go the other way. Rest part of the day it is sideways, so there is no trade. So okay, then you have this level as PDH, and your PDL was here, so which is here now. Okay, your virgin CPR is still virgin CPR, so let's extend this for today. Okay. Hmm. First candle has opened within the CPR, no trade. Second candle has broken the top of the CPR, top of the first candle, but still within the CPR, no trade. Third candle has reversed, but within the CPR, no trade. So the bottom, okay, this candle also protected it. This candle has broken it, but I told you the body, like it's not hardly 10%, 5% of the body above this breakout line. So there is no trade on this candle. It should be convincing breakout. Although it was convincing for PDL, but the range breakout it is not. So no trade. And then this candle has reversed. This candle has given an indication that it's a false breakout. But false breakout when it will happen here, when this the opposite candle will reverse and close above the first candle high, and secondly it is still below the 20 EMA. Third, there is a small wicks on top, and fourth is there is a CPR on the way. Now look, this, okay, on such days you can earn a big thing. What market tried to break this CPR, it did not happen, and this is the average CPR, average to narrow CPR. So in such days range breakout trades will work. So we have to just find the direction of the market in such days. What happened is this could not go up, so this will go down, but again it reversed, so we have to wait till it reaches the top or it gives any indication from this resistance, and this candle has given that indication, but still it was above the 20 EMA. So you should not take the trade on this candle 10-15. You should take the trade on the 10-20 candle, which has properly precisely broken the 20 EMA, and then it failed rest of the day, and then again you have to wait uh, till the market breaks this 20 EMA. If you want to go like you have to trade along, trade either 1:2 risk reward, or if you want to take the trade on your direction, take till this 20 EMA is broken. Like 20 EMA is broken by this candle, you should get out here, although it failed again, but you should get out here. That's the, and look, there was a virgin CPR also, so that is how this candle has reversed, so you can get out here as well. This is a important resistance, support here. Now this virgin CPR is broken both the sides, so it is no more virgin, so you can stop extending that level. Then so in today the most high probability trade was the short trade here, should go short, should go, okay, this one, swing high, and then there is a bottom CPR, so your stop loss should be here. Since the stop loss is too big, do the position sizing, and 1:2 or the next support, virgin CPR or this pivot, or this 20 EMA, as long as it breaks the 20 EMA. Okay, so let's move on. This is PDL again, PDL. And one more thing I want to tell you, although this is virgin CPR, this will be powerful, or any support resistance will be powerful if the market is around it, opened, or it is trying to, but market is falling from top, it's like a falling knife. Don't try to catch it. It will break any kind of support. But if market has opened somewhere here trying to take support, then it is a high probability. But if the market is falling from top, or if it is going like from long move from bottom, then any kind of resistance or support will be broken. So let's keep that in mind. This all comes out of experience. That's why you just, these videos are only for educational purpose. Don't put all your capital into place, stating like you know the market, and market, you know now every move it will work. Doesn't work. If every move is working out, you are in the wrong direction. Your you should your stop loss must hit. If your stop loss is not getting hit for consecutively like 10-20 trades, then you are in the wrong direction. Maybe the same thing will happen next 20 moves, 20 trades, your stop loss will consecutively hit when you get overconfident in the trading. So let's see, this is not a virgin CPR, so we can't extend it. These are two when the market is, since there was a big move yesterday, or on 25th 6th January, the next day will be white CPR. This is standard. White CPR is generally reversal or a sideways day. White CPR and the market opens within the CPR, generally it's a sideways day, because it cannot leave the CPR, or it cannot like, even if it breaks the CPR, it cannot go too far from the CPR, because CPR will act like a magnet. This white CPR is a magnet, so there is no trade. Even if it breaks here and it's a small breakout, like small body has gone down, so this is, there is a, this is like a trap candle, I say. trap candle, and then this reverse, this is also trap candle on wide CPR days, so there is no trade on this day. By looking at the CPR and opening move and all this, we can predict. So sometimes when you have experience, you will not waste time on such days. You will like switch off your computer on around, say, within 1 hour market opens. Let's go next day. This is PDL, and now since there is a wide CPR and sideways day, the next will be narrow CPR, and maybe trending day or reversal day or zigzag day, anything can happen. Now look how narrow CPR it is. But since this is very narrow CPR, again very narrow CPR is dangerous. Usually I call it as a zigzag day. First candle has properly broken the CPR. This CPR for me is the weakest CPR and should not be considered as CPR. What we can consider is a 20 MA. First candle has broken the 20 MA, so you can go short, put your stop loss above the 20 MA, and twice the stop loss is your target. Somewhere on this pivot is your target. As long as your candles are below the 20 MA, you are safe till here. On this candle, you should get out. Very simple, guys. Don't make trading complicated. It's very simple. And there is one more trade if you want to go, because this was long consolidation and this candle is a proper bullish candle, kind of power pattern, very small wicks around. It has broken decisively the 20 MA and pivot. You can go long here. Go long here, put your stop loss below this, below the day's low, not below the candle. Always remember this. When there is a false breakout, the day's end is your good to go stop losses, because market tries to go to the corners of the day, like anywhere there was a here, this will be your big resistance. If market has broken before 3 p.m. somewhere around 2:30, if it has broken this with a proper candle indication, then there was a entry, because that's a resistance. People will have stop losses, their stop losses will be taken, and then they have to cover their shorts. That is forcefully, unwillingly, but they have to cover their shorts. So that's how market will go up. Go long here. In this case, long on this position, stop loss below this, yeah, below this day's low, and then twice the stop loss is your target. Where is twice the stop loss? Yeah, twice the stop loss or the CPR. Although it is very weak CPR for me, you can exit on the CPR. So that's it. Let's go next day. Next day is, this is Wednesday. Wednesday's low and high. You call it PDH, PDL. You can term anything as long as you understood the concept. You can say high, lows, any pattern, any name. But I'm just giving you like a very layman's terminologies to understand. Anybody can apply this logic. This, you don't have to be very good in studies, scholar, or this is the beauty of trading. Anybody can enter, anybody can earn and make a living out of it, but you have to just be consistent and disciplined with your setups. This is PDH, PDL, low, high and low. Then this is okay, we can consider it as average CPR, average to wide CPR. The first candle has broken the CPR, broken the 20 MA, but look at very small portion of this candle is below the CPR. So it's a low probability for me, but still if you want to go short, you have to go short here. Keep your stop loss above the 20 MA, because more than the CPR breakout, I am treating this as a 20 MA breakout with the, like yesterday's case, similar case here. It has broken, for first candle has broken the 20 MA. So mostly as long as it is below the 20 MA, you can keep your trade. Okay, so this candle has broken, but again it's a very small candle has broken. Again this candle has reversed. So if you miss this trade on the first candle, then when you take the trade, always respect your stop loss. Although this candle has reversed it, since you kept the stop loss here on above the 20 MA, you should follow your stop loss. As long as your stop loss is not hit, you be in the trade. So I think it gives you 1:2 risk reward here or somewhere here. but since this pivot is on the way, you can exit on this pivot. So this candle has again reversed. So again, you can, if you miss this trade here, you go short on this candle. Above the candle or above the CPR is your stop loss, and 1:2 is risk reward. Maybe this pivot is your risk reward. Now within this candle has broken the 20 EMA. It is giving indication that it will go up, but you see there is a CPR on the way, and there is a big resistance, first candle top, okay, after the CPR also. So this is a low probability trade, and this candle has also broken, reversed it. You can go short, but this is low probability trade. Instead of this second candle, this first candle would have broken this, then I would have gone short here. So this is also low probability. That's it. There is no trade on this day again. Let's mark low and highs. This is PDL, this is PDH again. It's, keep it very simple: supply and resistance, supply and demand, supply and demand, resistance and support, demand and supply, resistance and support. Okay, so on this case, the first candle opened within the CPR. Again, the body is red, top wicks, down wicks, not much to do, no trade on the first candle. Then the third candle has broken it, and you must go short on this candle. I'll tell you why. It's a range breakout, it's a third candle. Second candle tried to sustain here, but third candle has decisively broken it. How decisively? I'll tell you. Because it has broken from the center of the candle, almost center of the candle, yes. So it is broken, it has broken the CPR, it has broken the first candle low, and it has broken the 20 MA. No matter what PDL or pivot is on the way, you should go short here. If you are not confident, make your position sizing, go with small lots, but you can capture some profit here. So usually I will keep above the CPR, but the safe stop loss would be above this line, or since this bottom CPR is there, this is the safest stop loss, and within 1:2. So here, yes, this pivot. If you take above the CPR, two position sizing, and you will find this is your target hit. Okay, why this market reversed from here? Is there any support? Let us check. You should go only like say 7-8 days, otherwise there must be something, some gap must have formed on a previous day. You will understand this is which day. uh, it's not always that there is a reason for reversal, but most of the time something must happen. This is 10th Jan, so let me go on 10th Jan. Okay, on a daily time frame I have to go. Let me see, where is 10th Jan? 15 is 13. Okay, 10th Jan. Oh, look at this big candle. And that is why, yeah, exactly from there it was the bottom of the candle. So guys, I was not aware, but you can make out why this market was like this. Okay, to be precise, if you take this bottom and bottom somewhere, yes, this 10th Jan candle has reversed that way. Okay, 10th Jan. Okay, no problem. Suppose you don't know, you don't follow the daily time frame, let it happen. Then what happens here? Or your first trade hit your target, then you have to be very cautious to save your capital or whatever profit you earn on the first day, first trade. You should not blow it up. So let's see what is the high probability trades only. This candle has broken it, but it's not decisive breakout. Look, there is a pivot immediately, and it has a wicks, and it's a back to back big candle. So this is not a 20 EMA breakout for me. Although it worked, it will work, it will not work, but you have to follow the. Now what, in the very simple language, what is this point? This is a supply zone, because market fell from here to this point. So this is a supply zone. So whenever market comes to this point, again take a trade. Exactly this candle. Okay, 11:35 candle, take a trade here, put your stop loss above the CPR. This is a good place for stop loss, because it's a day's high, it's above the CPR. So the best protected stop loss. Put a stop loss here, go short on this candle, and take twice the stop loss is your target. Maybe this pivot or next pivot. Okay, that's it. Now next day is, this is the low. The low, as we said, it was the low of some B candle on a daily time frame. That's why it was not, it reversed from that point. Now this is PDH. PDH is again a supply zone and important resistance. So let's see what happens here. The market opened here. Oh, market opened gap down, but with a green candle. This is generally indication of, although market opened gap down, but market is not willing to go gap down in the same direction. It is called gap down rejection pattern. It is rejecting. If you go long here, your stop loss will be below the candle or below this pivot. There should be some goods. Or if you think that it's a big stop loss, wait for the retracement. Retracement happened here on this candle. Then go long. Go long on this stop. Put your stop loss. Twice the stop loss is your target. This candle has broken the 20 EMA, but see why these small pivots I plot, they will save you, because this pivot, when it closed here, it's not a good trade, or it's a low probability. It should have some space to move this candle up, then only it becomes a high probability. Now look what happened here. This, the gap formed as soon as market opened below this big thing gap formed. Okay, now there can be only two things: the gap will be broken or market will reverse. Now here the gap could not be broken. This candle has given you indication that it will go down. It's reversing. So go short here, keep your stop loss on top. Twice the stop loss is your target, or day's low is your target. That's it. Very simple, don't make it complex. So even another trade is, this candle has broken the 20 EMA, but it's not a good trade, because there is pivot, there is immediate resistance of this gap border. So wait for the reversal. The reversal is given by this candle. This candle has given the fake breakout from 20 EMA. Go short here. Stop loss will be above the day's high, above this line, and then twice the stop loss or day's low. Day's low, mark a point here. This will be day's low, and should be out of your trade. Day's low. Day's low also you should check whether market will reverse from here or it will break. This candle only has a given indication to me or to the experienced trader that it will break this level, because you know, any candle, as long as it is not a powerful or bullish candle, it cannot go up. So this consolidation, and this has broken. So again you can take a trade. If you are experienced, you will go short here, put your stop loss on top. As long as the market is below 20 EMA, you are safe. Okay, so let's check now. And this, okay, the gap is filled, so there is no gap border now. That is just a point. Now let us check what happened here. But although there is no gap, there is a, this is a strong resistance if market is below that. Let me tell you how. What is the PDH for this point? PDH. Now this is not just a PDH, this is a turning point. This was the low and this was the high, and market could not go up. So there is a big resistance here if market is below this, or this will be acting as a big support if market opens above this. Let us see what happens next day. Next day is market is below this. The first candle is green candle, exactly with our setup coming out of from CPR. You should go long, keep your stop loss below the central pivot, and you can expect market to go up in the same direction. But the CPR, you see CPR is white CPR. Again, same thing. With experience, you will know this will work or not. When you are not sure with this, do position sizing. If you are sure, you have to keep your stop loss very small. Now, what happened? 20 MA is there. The market is above this. This candle has broken. Again, same thing. When market is nearby, okay, the CPR will take the support and go up. If market is falling from top, it it may break the CPR. In this case, we can treat this candle or this candle as a CPR reversal pattern. So going long here on this candle, putting your stop loss below the CPR and expect twice the move. But in this case, this is the day's high. So day's high is also again a resistance. So this is low probability trade. I don't see any other trade on this day. Yeah, everything, most of the time it is within the CPR. So no trade for the day. Okay, what is next? Next is this and this. Now this, although we are taking out this level and putting it here, but this level to be watched for next few days because this is big resistance. Now what happened on this day, 15 Jan, market opened at PDH, gave indication that this is a bearish candle, but look how big is bearish candle. You cannot take a trade here and keep your stop loss here or here, and on the way there is CPR. Although some part of it worked, but it's not even this third candle has broken this, but there is a CPR on the way, so it's a low probability trade. Now what happened, this candle has reversed it and it is not a proper reversal, so there is no trade on this candle. There is no trade on this candle because as long as this is not breaking properly the first candle low or this previous candle top, there is no trade. This candle we can treat as a retracement candle. This candle is taking support at CPR and this is 20 MA also, but still low probability trade. It's not a proper setup or something. Now, okay, this candle has broken the top, but there is no trade. This is a low probability. This is a parabolic breakout, momentum breakout. See, top is broken by this candle, but look, 1, 2, 3, 4, 4 big candles, green candles in the same direction. This is likely to fail. You can take even the reversal trade when immediately it fails, or this candle or this candle. This is like a ambush entry. This should, you are expecting that market will go down. For a proper setup, you have to wait. Yes, top, this candle has broken, but this is a big candle, huge candle. Your stop loss will be huge. Do position sizing or keep your proper stop loss above the PDH or half of the candle, or if you are taking it the full above the candle or day's high, do position sizing. And this has worked. Yes, when the first candle is red candle, market moved up from here. This can be a candidate for W pattern. Let us see. It can be a, when market again comes to this point and gives any indication like this, yes, this candle has given, okay, but there is a CPR immediately, so low probability. Although it worked, it's a low probability. Even this candle, this candle, this candle, all these are green candles trying to take the support, and this becomes W pattern. First candle should be red candle, market should fall, then it should go up at least 60% of this range, but it has even taken out the top of the first candle. So this is a good setup for W pattern, provided there is no CPR. So this is a low probability today. Let us check what happened. Not every day is a trading day, guys. Don't trade every trade day, every candle. If you want to take trading as a profession, this is the only profession you should find out a reason why you should not take the trade, means why you should not work that day. Okay. Then what happened on 16 Jan? 16 Jan, oh, it's a gap up, but you can say like what we said for gap down. Now this is a gap up rejection. First candle is red candle, and the very narrow CPR, very narrow CPR. I'm very scared of very narrow CPR. These are like unpredictable days. So look what happened. Nothing happened on that day. Still, if you want to take a trade, I don't see small wicks, but since the body is too big, you can take a trade here. Put your stop loss above this pivot, and twice the stop loss. I think neither this is a break even trade, not neither the stop loss hit nor the target. Okay. Um, Here, with this candle only we can know that market is hesitant to break this PDH, because although it broke, it has a big wicks down. So, and the rest whatever these candles formed after that candle could not break the low of this wicks. They should break the low wicks. This candle kind of reversed it, but again, since this candle is there, as long as this wicks is broken, the market is still above this level. If this is broken, then it can go down. Okay. uh, this is high, this is low. Okay, this, I think, the last day of last 2 weeks. There is a big candle. Big candle is always a trap if it is the first candle of the day, and no matter what color it is, the big candle always avoid to. It's a huge candle, and it's not a proper breakout also. It's starting from here. If this line would have been somewhere in the center, okay, we could have gone this, because this is how the risk management is. Your stop loss should fall somewhere within like half of your target. So big candle, no trade. Next candle is green candle, but this is not a proper green candle. If it would have been a proper bullish candle, then this is a perfect candidate for extreme candle reversal pattern. This was an extreme candle, and the next candle has reversed. But since there was a huge wicks, there is no. Although this worked, I think for, yeah, it worked, but this is a low probability, no trade here. Now, okay, this candle, okay, this candle has broken the 20 MA. Now since this is broken, you guys probably will say that let's go long here because it has broken. But look, there is this PDL and this B candle top. This is a big resistance because there are a lot of seller stop loss here. They will try to protect it. You should, like, with the experience, you will wait for the next candle to break it down. So this becomes a false breakout. You should go short here. This is the best entry to go short. Okay, and as I told you, not the third candle, the immediate candle has broken it. You can keep your stop loss above the candle or above this. Above the candle is anyway a swing high, so that's a good stop loss. But to be on a better side, you put it above the PDL, because when there is a series of supports or resistance, you should keep your stop loss on the last support or resistance. So the last resistance is here, PDL, so keep it here. Twice the twice the stop loss is your target, so target is here achieved, this one or this pivot. Then, yeah, first candle is red, then it moved up, but it broke this level, so this cannot be W pattern. Then when the W pattern can happen, when the market reaches this point again, this low, but market did not reach there. If you miss this entry, you have another entry here. It's very simple. Look, back to back red candles, 1 2 3 4 5 6, from this point to this point straight away. If you consider it like 30 minutes candle, it will be one big red candle. So what happens here? This is a, in simple layman's language, it's a supply zone. People are selling it here. So we should go with the flow. When market reaches here again, this is called retracement. You have to wait for retracement. Market reaches here and gives you indication, yeah, like say you missed the trade. Market knows that okay, you missed the trade. Okay, market again always gives one more opportunity in a day. Market will say, okay, it comes here, I'm giving you indication, this is the red candle, go for selling. So put your uh, enter the trade. Stop loss again the same above this swing high. This is the swing high. Okay, swing high and this PDL, and then twice that, somewhere here you will find your target achieved. Okay guys, thank you, take care, bye bye.